Hey, it's Mac with PriceActionTradingSystem.com, and it's Wednesday. It's April 26th. This will be our chart lesson for the day. And here's a look at our daily chart. You can see we continue to push lower today. We did bounce a little bit here into the close. Still a fairly bearish day, so we did get some more follow through selling there. Um, so we continue to push lower at this point. So looking at this, it looks like a big range. So the expectation is that if we don't go higher up here, that we'll probably try to go back and test the lows again. That's pretty much what you expect on a range. We did have this channel working up, and this is the first break. We really never got a retest of the highs, so that's still a possibility. So that's still why I'm a little hesitant to say we're probably going to push lower. But sometimes the larger pattern will take precedence, and you may not get a retest. We may just turn down now and go test the lows of the range, and that would be back down here somewhere. So it's just really hard to say yet. We'll see what tomorrow brings, but it looks like we're witnessing a little bit of a sell-off here. So we'll go with what price action gives us, and right now it seems to be selling off, and then we'll have a little bit of a rally into the close. So it could be more just profit taking again today. We'll see. But let's flip over to the 2000 tick chart, and you can see it really was two legs down, but it was a big range day, and then we rallied a little bit into the close. So let's flip over there and take a look at that chart, and we'll go through the trades, and we'll get through this day. Okay, here's a look at the 2000 tick chart. You can clearly see we had a leg down, a correction, and a second leg down. We had about looks like a 70% correction here, and then another leg down. And we did get a little bit more than a measured leg. It looked like prices were trying to make the measured leg on the range, and it looks like probably the range was the more dominant pattern today, even though you can't argue this downtrend. It's clearly prices are clearly reacting off of both the trend line and definitely the midline and even this lower line. You can see the prices. It looks accurate to me, but you can also see that we're not really here. We didn't get back to the trend line. Here we didn't get back to it. Then we're just kind of working sideways. You can clearly see this peak range within the bigger range. And when we just kept going sideways before we finally sold off and made a new low, obviously this channel played out, but it looks like the pattern was taking over, or the range pattern was taking over somewhat here. So I believe the range was the more dominant pattern, although you can't argue with this channel. You're probably better off to play the shorter term stuff in here like usual. And same thing on the way back up, and then on the way back down again here too. Play the green one and then the khaki one, and you might even play some of the shorter term ones within that. So that's kind of how I saw it today, and you can see there it's clearly two legs down, and we actually went a little further trying to make that measured move, and then we had bounce and had two legs up for the most part. So uh, there it is. That's how I saw it. You had to be a little patient this morning. It took a little while before we really had a decent setup because we were kind of stuck in this stuff right here, just really with no direction. So there was actually some strong support across here, and it took prices. They pushed through once, but it took a second push through before they could actually breach that and get a continued trend. So I'm sure that had a lot to do with the mostly sideways action there. So we still had a lot of buying coming in at this level down here. And that's probably why we were going sideways here as well. Took a little while to work through that price level. But anyway, let's zoom in here. We'll go through the trades and we'll wrap today. But 7 o'clock came right in here. Notice we had a couple of legs down, and then we rallied here, and we had this green channel working up. We get this pullback, and that's the first break of this green channel, and you get a first entry, and then you get a second entry. Unfortunately, that signal bar doesn't quite cut it. It makes it look congested, and both of these are below the EMA, so it makes it a little weaker for that reason as well. Let's see if you get a reversal or high or low, which you get here. But again, no setup that you can really trade. This broke higher and then turned down and went lower and then went back up. And it's like there's no, there was no really solid direction here, even though prices end up working higher. And we made a new high and then turned down. This one's tempting. Again, I think the signal bar is just a tad weak. You could probably argue for that one to be green. I went back and forth about it. If somebody took that trade that far away from the EMA, generally you want to wait on a lower high, and you just really don't get one here. It just takes off. And the lower high is way down here, and that's moved too far to trade is at the lower high. You know, the lower high needs to set up here with it pretty close to that first bar too. And this was just such a big selling bar here. Um, Maybe you take that one, but I wouldn't take anything. It's just too congested in here. And then we do come up here and make a lower high here, but this is like a first, second, third entry. So again, I think you need something better than that. You do get a lower high here, but you can see we're bounced at the midline 1, 2, 3, 4, 5 bars in a row, and you can see it continues to bounce there. It would have worked, but it was by the skin of your teeth, and then prices would have come back and stopped you out. Um, so I just don't think you can trade that uh, uh, reversal there. And I'm not crazy about the signal bar here. It's real close, but you'd want to have to trade this failure, and you just had too many bounces across there. And there's not much room between this one and again, I just really don't like that signal bar there. It's real close. You might even argue it closed in the lower 1/3, but and you would have got out of that trade, but you might have had to ride this bounce out before it went a little lower. I just don't think that was worth taking. And then of course you run down here and you test the lows again, but no signal bar there, and you would expect prices to make a break and maybe try to test the low, which they did and they couldn't, and then so they headed back to the top. I did like this one because now you got a triple test across there. One test, 2, 3. I mean, there's a few tests in between there too, but it really looks like you came up once, twice, 3 times there. Or actually 1, 2, 3 is the way I was looking at it. And nice signal bar, very bearish. So I like going short there. Of course, now it runs back down to the other side. Then you get a bullish bar. We've been going back and forth. And we actually had a break of the khaki trend line there. We didn't make a new low, though. But we bounced here, and there's a triple test and a nice signal bar. I like going long there all the same. And of course, it just gets to the midline and chops sideways and then turns down, and you get a first entry, and then you fail out the bottom, and there's a second entry long there. We're not looking for second entries in here, but if if a trade sets up and it's a second entry, pay a little more attention to it. But this is like a failed breakout, so if it breaks higher that far away from the EMA, it'll probably at least come back to that point, and you can see that's about what it did. And so enough for a scalp. It's still a little risky. Generally, you're better off to wait on a higher low here, and you don't get a higher low. It just drops on down. And unfortunately, I don't see. You might have looked at this as a failure. Notice there's a new high right here, and you get a first entry and then a second entry. But that doesn't look like. That just looks like some chop support there. So I don't really like that. I mean, it's so close to this support. It's just not worth taking. Just skip that. And of course, it drops on down, and you really don't get another chance to enter. This one is tempting. It's real tempting, but if you draw your little channel or your little range, which that's what that is, it's just congestion it's a really tight range, which is nothing more than congestion. If you draw that, there's not much room there to play with. Yeah, we did push a little lower, and maybe you will, but you can't. It's just not worth risking that right there for a couple of ticks. And that's all you would expect to get out of that at most is a couple of ticks. And what will usually happen is it'll tick you in and then bounce and stop you out and then go down. But we did get the break, 2 legs down, and then it reverses. I don't see anything. There was 2 legs down to this new low. I don't know if that would have worked if you took that or not. This is why it's always better to wait on a higher low. And you can see that wouldn't have worked. You'd have got stopped out on that. So I'd want a higher low here, especially with the fact that we're underneath the midline of this khaki channel, because if this channel is still in play, even though we've made a new low, we could go much lower. because we're struggling to go back above, as you can see, back above that EMA, and there's not much room back to that EMA. So that's a real concern. If you got a higher low that closed through or pushed through and pulled back, then maybe you consider that. But I don't like going long down here. Of course, it does take off. It turns out to be a good move. Break, new high, and then we're just chopping along. I like this one just because you got a triple test here with a little break lower that's probably going to fail. It gives you a really close to the low entry, so you got plenty of room to get out. Then it gives you a higher low that closes on the other side of the midline. Still enough room to get out. And then it comes back over here and it makes a triple test now. You call that a one. Really, I look at this like a 1, 2, 3 triple test. And again, it's right off the key entry point. It's off the support of the pink channel. It's off the possible trend line. It really kind of confirms it. It doesn't confirm it till this next bar, really. But I like entering there. As long as you got room to get out before the high. And then, of course, it shoots on up, pulls back, gives you a breakout pullback, and then it goes long. There is a failure right here. The problem is it's right back where the key entry point was, the support resistance. Originally I had this down here, but I moved it up a little bit. And actually at this point, I did not have it moved up. It would have still been here. I moved it up when we got this higher low over here. So you can see it's a bounce right off of that pink channel. And it takes it 3 more bounces before it goes anywhere. After this third one, people will probably trading that as a triple test of the trend line and confirming it, and maybe a failed second entry to boot. And then, of course, it takes off. Of course, it starts running stops when it breaks above that double top there. So I don't like entering there. I don't think you want to treat that like a failure. The true failure is here. So if you were going to enter, maybe here, and then when this doesn't break above it, then that gives you an inside bar, which is matching lows, so it's okay. You could still enter there, but I'm just not crazy about it. I think you're better off to wait. And then prices come back 2 more times. Of course, it doesn't break lower there either, so that's still part of that move up. So technically this is your failure, and then there are 2 legs up here that fail and it goes higher, but it's a little more convoluted. So nothing up here. I just can't risk entering this late. This is very tempting, but I have to tell people every day, don't try picking tops. You're better off to wait and see if you get a with trend entry. And of course you do. There's a second entry here, but that channel's still in play right there. And we're getting close to, we're right here at this previous resistance. So you got to be real careful now. So just maybe sit tight and see if you get a higher low or something else. And of course you do get a higher low with a great signal bar. So I like going long there. And all you get out is a scalp, and then boom, you get a second leg down. So they still came back and made the new low on that channel right there. But you see, you would have got your scalp out of it. And that's why we wait on that higher low or something, just to be sure that more people are going to be buying and helping you reach your scalp there. And that's not really a failure either, because there's no break lower here. So it's just a higher low is all it is. Now, you might argue there's a triple test in there, because there really is. So that's another reason I kind of like that trade. I didn't draw the support across there, but it's there. So the triple test was really here, and that's the higher low on that triple test. Of course, we get the break and move to a new low, and then it bounces again. Now notice this one, you get a new high, and there's a first entry, comes back, and when it breaks higher there's a second entry long. It's a little congested, and it's really close to some resistance here, so for that reason, I'm not crazy about it. But if you also notice there's a new low here, and you get a first entry, and then notice it goes higher, and then comes back down and gives you a second entry. So if it breaks above there's a failure. So with that being both the failure and the second entry, and all that strong support across there, maybe you try to get a scalp out of that. And you would have easily gotten your scalp. You probably wouldn't have gotten anything more than that. And it does rocket on up, but you probably don't get that And then we do make this new high. Now you got your break, new high on the green. It looks like a couple of legs up. It looks like you got a triple test here. If that signal bar on that lower high was a little better, I'd say take that trade. So if you did have a better signal bar there, take that trade. But it shoots on down through the EMA, pulls back, and you get a failed second entry long. So I like going long there on that trap. And of course, it just rockets straight down to that last support and then kind of chops along and drops on down again. I think we've been a little too far away from the EMA here. There's really another little channel here, like so. And of course, you get your break, move to a new low, and then it just works sideways back over to here where you have another larger trend channel. And this one confirms it on a second entry, but I still would like one more confirmation of that, and then suddenly you get a lower high and a big bullish bar. Notice you got the resistance there. You got the resistance of the trend line. You've also closed below the EMA. I like going short there. There's plenty of room back down to this low, and we probably are going to go to the other side of the channel, maybe even lower. And of course, that's what happens. We run on down. Two sideways and congested here. Again, you might look at that as a failure. But when this one didn't break lower, just skip it. It's not worth risking it. We come back, no setup here. Lower high, but again, no signal bar. And it's a shame because that's a really nice move down. And now that we've gone this far, you'd want to look for that measured leg compared to this one. So that means from here, we've got all this room still to go. That there's a good chance that's where we're headed. So you get a second entry here. I'm not crazy about it. It is right off a key entry point that this confirms, but we're not back to the midline. We're not even back to the EMA, and we're surely not back over here. So it could bounce on you. So you want to see several moves where it turns down through here first before you start trading that, and you just really never get a setup. There is a second entry short here. Notice that this one's a second entry. I marked it maybe as a maybe. I probably would trade this on the engulfing bar. It broke higher than turned down, so that's probably going to trap some people, and that would probably give you room to get out before here, where going short here, you don't have the room. It still would have worked, but I don't think you want to risk it that way. So if you didn't take this on the engulfing bar, I probably wouldn't take that trade. It's just too close to that last low, and that's the low of the day, I believe. Right there. It's pretty close. If it's not the low of the day, it's real close. And you can see here we finally got a break, a few legs down, and we just kept chopping down. There's another second entry here. Notice the new low, and you went low on that green bar right there, and then it turned back up and turned back down. So when it came back by again, it was a second entry short, but it's just too close to those lows. Double bottom now, and then this bar doesn't break lower. Just skip that. This is not technically a second entry, but it still looks like two clear legs back to the EMA. If you saw that and was such a small bar and it's bearish like 6 ticks, that's a very low risk entry. If you wanted to take that, you could. It's also congested with a little failed breakout, and there's plenty of room back to here. So I kind of like that trade. It's a little aggressive, but clearly we're still going lower here. And there is another shorter term trend channel, and that's the first break of it. I didn't put this on here, but you can see it. There it is. Let's change that one to a different color. So that's clearly two legs back to the EMA. It's a little failed breakout of sideways action there. It's a very low, very small, low risk signal bar right off of the EMA, right off the midline. And again, there's plenty of room. So maybe you take that trade. Nothing here, and then we bounce. Come up here, you get a first break of this channel, attempted a new high and a second entry short right there. This has been a fairly strong trend. And you can see how much we came up short there, and that's about the same we overshot it. I like just trying to ride that back to the EMA, and hopefully we continue to go lower and make a new low. That's the first break of a very bearish trend channel, and this thing kind of takes off here. And then you get another one of those convoluted second entries that looks very much like this one right here. It's almost a repeat pattern. And then you get a little lower high. I wouldn't take the lower high. I really don't even like the second entry there, but it's a repeat pattern. The only problem is you do have a break and a new low, and this is sideways. That's not technically congestion. You don't really have, I mean, maybe you argue that there's one over here that has the tiny body. So you could probably, I mean, these look more like two up-down bars, and you'll see those occasionally. They're not necessarily congestion, but I still think it's risky. Just skip it. And we continue to chop on down, but I just don't see anything there worth risking. We're getting late in the day too. It looks like we're going to rally out of there. But again, I don't see any entry to go long. Maybe right here when you get this triple test. But it's so late in the day. But you can see that triple test, and that is also when it I don't know if this broke higher or lower. I think it went lower and then turned up. Either way, you could probably wait for it to close, but with that being a 3-tick bar, it's so when it breaks lower and turns up, it's like 4 or 5 ticks you're risking there. Very small risk on a second entry long and a triple test across there. So maybe you take that one. Again, it's late in the day, so you don't want to get too risky. But if you see what I just explained there, that's pretty sound that maybe you'll get a scalp out of that. Didn't mean to do that. So you might want to risk that. You don't give you much more than that, and then you would have got stopped out before it went sideways and went much higher. And that's the problem with trying to pick tops and bottoms. And I had that conversation in the forum today with somebody. Don't try to, if you're a new trader and you're trying to get to break even or just barely getting profitable, you still shouldn't be taking these kind of trades. Just stick with the with trend trades, the sure things, and stay away from picking the tops and bottoms. When you become experienced and you understand reversals and triple test and have a lot of experience seeing this, and you can pretty much call it most of the time, you might be able to start taking some of those. But if you try to trade those early on and you try to make that your trading strategy, you're going to fail at this. Trust me. And that's the reason, that's one of the most fundamental rules in our manual. One of the first ones we talk about is don't counter trend trading. Most new traders, if they just throw counter trend trying to pick tops and bottoms out and stick with entering with the trend, most of you would improve your trading immediately, because it's just so hard to pick tops and bottoms. You really, really need to be skilled at reading this chart, and then it's still risky. So even for somebody like me to take that trade right there, that's risky. So stay away from them. Take my word for it. Stay away from that. Stay away from failed second entries and reversals, because most of you don't understand them. You're just trying to trade a pattern, and you're going to lose. You're going to lose badly. And you are losing. Some of you are losing badly, even though I continue to tell you that. You just don't listen. And, you know, if I thought they worked great, I'd tell you to take them. I wouldn't tell you to skip them. But people just do not listen. No matter what I try to tell people, people don't want to listen. They think they're going to be different, and they think that they're going to be the outlier. And no, you're going to be one of the 90% that you're a donor. You're just going to donate your money to the skilled traders. And they need people like that, because if he didn't, it'd be a few of the best traders fighting it out, and they just pass money back and forth. But as long as new donors come in that don't listen and don't know what they're doing, and they try to trade with live money, well, they eat that up, because that's their free money. It's just like free lunch money every day. It's their ATM. So, and no matter how smart you are, no matter how high your IQ is, you're not going to be any different than any other unskilled trader trying to come in here and trade and make money. You're going to lose your money. But people don't believe that. They, for whatever reason, trading, I mean, I get it. There's so many marketing gurus out there. There's people that are good at marketing, and they tell you these things, and they put these little videos up there, and they talk about this stuff, and it sounds so easy, it sounds so wonderful, but you can't do it. Most of them can't do it. I don't know any nicer way to say it. You can't do it. It's not that easy. Yeah, you might hit 1 out of 10, but you're going to lose the other 9 of them. You're going to lose your shirt, your baby's shoes, your baby's formula, diapers, whatever. Don't, just trust me when I tell you, don't try to do these things. It would be great if people would just listen and believe me, but for whatever reason, they just will not listen and they won't believe me, and they think they're going to be different. But anyway, by the end of the day, when we got this bounce here, you could see we had a few more bounces across that price level right there. And that turned out to be real close to the measured move down here, and we bounced out of there. So I believe the sideways stuff was the range was the dominant pattern. But we still had a trend down, a trend up, and another trend down. And we had some trends both ways all mixed in there. A lot of mixed trading still. But this was a pretty good downtrend. It's a shame we didn't get more setups. This was a pretty good uptrend, but you got a few opportunities on it. And this one was a little harder because it was more sideways. Even though that channel was in play, you were getting highs at odd places. But I still think that's a valid channel. It's just not an easy one to trade. So there it is, almost 30 minutes worth today. I drug this one out, but we talked about some important stuff, and I hope some of you heard it, that it hits home with you, and that you listen, because the worst thing I hate to see is people donate their money. Don't be a donator. I've said that a lot over the past, but when I say it, I mean it. And most people think they're going to be the exception to the rule. They're going to be they're the smart one, the high IQ. And I'll say this before I exit here. The smarter you are and the higher your IQ is, the harder this is going to be for you. And the reason I say that is because price movements do not follow common sense, rational thinking. They go 100% against it. So most of you smart, high IQ types, I don't consider myself in that group. I'm not the dumbest guy in the room, but I'm not the smartest, highest IQ either. But most of you smart IQ, high IQ types, and there's probably a bunch of you watching right now, you're used to that common sense and that smartness helping you in life. But trust me when I tell you this, it's going to work against you in trading, because price action and price movements do not follow common sense, everyday thinking. So your smartness is going to work against you. Trust me when I tell you that. You don't have to believe me, but you'll find out. Your smartness is going to work against you. So the smarter you are, at first, the harder this is going to be for you, because you're going to beat your head against a wall trying to use your smarts and your brains that you've reinforced over the years of your life that have worked very well for you, that are going to work against you here. And I mean, honestly, the people that come in and learn this the quickest and have the fewest, that learn it faster than anybody with the fewest hiccups, are people that have never traded before and that just follow the rules. They don't know any better. They don't know all the stupid, dumb bull wacky that they've read all over the internet. They don't know nothing about trading. They heard it was a great way to learn, to try to make money, and they come in here with open eyes. They follow the rules. They trade, and in no time they're having success. But they aren't following. They aren't following the plan for a week and saying this doesn't work, and then jumping over to this plan and following it for a week and saying, well, that doesn't work, and following. They're not trying to use their common sense. They're not trying to use their smarts. They're just following the rules, just as they're written. And those people have great success. And honestly, those are the ones that learn quicker than anybody. So I've told that story many times before. If you've never heard it, back this up and listen to it a few times, because I can assure you it's the truth. And most people that have the quickest, easiest success are the people that don't buck the system. They don't try to add their little bit to it. They don't try to add this system they learned over here. They don't try to use pin bars. They don't try to use they don't, there's so many things, they don't try to look at the volume and figure out volume and this and that. All that stuff is bullwacky. You don't need any of that. Everything I just talked about is in this chart, and you can learn to see it right here. You don't need to some indicator down here telling you. All you want to do is watch this price action, understand what it's doing, understand where it's trying to go, and try to go with it. That's the key. Look, look at this chart where every one of the best trades happen at. Where is it? It's the key entry points. Off this trend line, off this support and resistance of this range, off this trend line, off this trend line, and off this support down here. That's where every one of the best trades happen, at the key entry point. Concentrate on finding the key entry point and understanding what prices are doing and where they're going, and you're going to have a whole lot more success. That's the key. Key entry points. That's the key to winning. That's the key to where the best trades set up. Study your charts. You know, when I say study your charts, I mean come in here and try to find the true trend lines. Try to say, okay, now where did all the best entries happen? And watch what you'll find out. They'll be at the key entry points. Go back and look at chart lessons I've done. I've been doing them for 10 or 15 years here. I don't even know how many are up at I'll probably put up thousands. And you'll see the same thing over and over and over. Entries off the trend line, entry off the support and resistance of the range, the key entry points. It's like clockwork. The key is learning to find them, learning to understand how far along in the trend you are. If the trend's midway, almost over, or done and about to reverse, you can learn all that. No, it doesn't happen overnight. It's not easy. You got to be experienced at it. You got to get a lot of hours and experience at this. So just keep working on it. Never say never. This can be done. I don't care what, you know, all the naysayers that say it can't be done are the ones that failed. They're the donators that came in here and didn't listen and had unrealistic expectations, thought they were going to read a manual and trade for a few weeks and practice and go make money and get rich. It doesn't work like that. This is not a get rich quick scheme. You want to take a little bit every day, and then over time you'll get rich. But it's not get rich quick, and if you treat it like that, you're going to fail for that reason alone. But that's what most people come here thinking. They see some YouTube video that somebody threw up there, that copied it from somebody else. Second entries, that's the big one. You know, that's the copycat that everybody out on the internet now is copycatting second entries. I was talking about them 15, 20 years ago and never heard of them. But now everybody's a second entry expert, and they'll make these little videos and show them working over and over and how easy they are, and you'll go pay them $500 or whatever they charge, and you won't learn squat, and you won't be anywhere closer to being successful than you were when you started. Because they're just selling you a second entry pattern, and the pattern by itself is no good. You got to learn the context of the chart and when a second entry is a good entry. So don't fall for that slick marketing, because there's some slick marketers out there that'll take your shirt from you in 2 seconds at this, especially when you don't know what you're doing and you don't know what to look for. I mean, I didn't mean to get off. Here I am. I just keep going. I keep saying I'm done, and I keep going. I didn't mean to get off on this tangent today, but for some reason, it never fails. I get something pushes me to say these things. I don't intend on saying them. They just come out, and never fails. Somebody will email me tomorrow and say, I felt like you were talking straight to me. So I believe things happen for a reason. I believe I get these urges to say these things for a reason. Hopefully I spoke to you today. If I didn't, hopefully I didn't irritate you, because I do sometimes get on my soapbox and probably talk too much. But somebody always says, hey, I needed to hear that. And so hopefully you're listening today, whoever it was that needed to hear that. And we'll be back again to do it tomorrow. Believe it or not, tomorrow's Thursday, and we'll wrap up another week. I don't know where the weeks are going. Man, this is between my health issue with my ear and my cancer and my issues with my mom. I'm just I'm in a daze lately. It just seems like time's flying by, and there's just not enough time in the day for me. But hey, I'm healing up. My pain has subsided. I'm not having to take my pain pills anymore. I'm feeling really pretty good, so I might even trade tomorrow. But if I don't, I'll probably start trading again Monday, unless something changes, because I'm feeling a lot better. After my appointment, they removed some of the gauze packing that was packed under my ear, and I think that was what was causing a lot of my pain. I'm going to tell you, it was painful when they removed it. But now that it's out of there, the pain has subsided, and he said it was healing up nicely, and so I got to wait a month, and I'll have a second surgery, and I'll probably have to go through another couple of weeks of this, and then hopefully from there I'm on to getting back to normal. So I'm blessed that I'm cancer free. That's the main thing. So thanks for all the emails. Thanks for the prayers. I appreciate you guys. Um, Sorry if I got on a tangent and irritated anybody today. But again, I hope whoever needed to hear that was listening, because usually I get an email the very next day and somebody says, man, I needed to hear that. So I hope that's the case today. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.